In my personal long-term dividend growth portfolio, I have a good mixture of different dividend-paying ETFs that offer a massive amount of growth potential long-term, but also a ton of names in here that offer a lot more income from day one and maybe not as much growth long-term. By utilizing different ETFs that offer either more cash flow today or more growth tomorrow, I hope to create a long-term portfolio that's not only going to pay me a ton of dividend income every single month, but also grow over time throughout the years. Now in this video, we're gonna go over 5 of my favorite dividend-paying ETFs that either offer a massive amount of growth or dividends from day one, giving you a nice mixture of dividends and growth long-term. So if you want to see which 5 are my all-time favorite as of right now, stick around, drop a like down below, and let's get right into it. Real quick, for those that haven't already, make sure to go to the first link in my description and grab my new dividend investing ebook, where I share exactly how I went from $0 invested to now earning over $6,000 on a monthly basis and over $1 million invested in the markets. Along with the ebook, you're also going to receive my custom dividend tracker, where you can track your dividend progress on an ongoing basis and reach your dividend investing goals. So make sure to grab yourself a copy of my dividend investing ebook and the new dividend tracker today. It's the first link in my description. The first dividend paying ETF that's one of my all-time favorites as of right now that I've been buying a lot of as of recently is ticker symbol SPYI, or the NEOS S&P 500 High Income ETF. Now this ETF isn't necessarily going to grow your portfolio all that much, and that's just because this ETF follows a strategy to generate a ton of income consistently for investors on a monthly basis. Now, over the last year, SPYI is up around 3.35%, and year-to-date up around 6.2%. This ETF does have an expense ratio of around 0.68%, and like I said earlier, does pay a dividend monthly, which is going to help, especially for those dividend investors out there, like myself, that are going to be looking to use some of their dividends, if not all their dividends, for bills later on. Now, speaking of dividends, SPYI does have an 11.56% trailing 12-month dividend yield, which is massive. Even comparing this to things like JEPB or JEPQ, this ETF pays a lot more income, or at least has paid a lot more income consistently over the last year than some of the other popular names. Now, how much income should an investor expect per month for one share of SPYI? Well, as of recently, over the last year, SPYI has paid on average around 48.5 to maybe 49 cents every single month on average, consistently, which has been great considering I've been buying SPYI for around 6 or so months now. Now, as far as a dividend income play, this is one of my favorite ETFs across the entire market. Definitely check out SPYI, dig a little bit deeper into it if you haven't already. Now, a dividend ETF that might have a little bit more growth potential, but also pays a ton of dividend income from day one, is ticker symbol DIVO or DIVO, the Amplify CWP Enhanced Dividend Income ETF. Now, this ETF has a high quality basket of holdings. It's pretty curated though. It's only 36 holdings, more or less, so it's a small basket of holdings. But with this basket of holdings that don't necessarily pay the most dividends from day one, they also utilize a cover call overlay, which generates a ton of income for investors, but with that also a lot of growth. DIVO is up around 11% over the last 1 year and around 8.3% year to date. DIVO does have an expense ratio of around 0.56%, does pay a dividend monthly, and even though DIVO is up around 10 or 11% over the last year, this ETF also pays a 4.53% trailing 12-month dividend yield, which isn't the highest. It's not as big as that of like SPYI or JEPQ, of course, but still, for how much growth potential this ETF has, even with that cover call overlay, this ETF offers sort of the best of both worlds, giving investors like myself growth but also income consistently. Now, for one share of DIVO, investors should expect around 15 cents more or less every single month, or at least that's what we're going off of over the last year or so. I've owned DIVO in my portfolio for years now. I don't really see that many dividend investors talk about it all that much. DIVO is definitely one to look into if you love growth but also want to get paid a lot of dividend income from day one. Another one of my favorites, we can't leave this one out, of course, is ticker symbol JEPQ, or the JP Morgan Nasdaq Equity Premium Income ETF. Now, even though JEPQ is of course an income ETF, this ETF has shocked a lot of us investors that have been holding on it for a while because this ETF has grown like crazy over multiple different time frames. The ETF is up around 16-17% on the 1-year time frame, has a pretty cheap expense ratio of 0.35%, also does pay a dividend monthly. Of course, the dividend is not going to be as large as some of the other newer covered call style ETFs like SPYI or even like QQQI. But JEPQ does have a good track record, a rock solid strategy, and with a 9% more or less trailing 12-month dividend yield, with the massive growth this ETF has seen, JEPQ is not only in my portfolio, but I continue to buy more JEPQ pretty consistently even to this day. Another one of my favorite dividend paying ETFs, and this would definitely have to be more of an income focused play, is SVOL, or the Simplify Volatility Premium ETF. Now this ETF is basically flat in the 1-year time frame, but does offer a 15.87% trailing 12-month dividend yield. So even if this ETF isn't necessarily going to grow long term, which it honestly hasn't, it's actually down 11.36%. This ETF pays a massive amount of dividend income consistently to investors, or at least has historically. Now SVOL has paid a consistent 30 cents more or less per share per month every single month consistently for a while now. And for an ETF being only around $22 or $23 is a consistent amount of cash flow from day one, which is definitely partially one of the reasons I've been loading up on SVOL to raise my overall monthly dividend income consistently with a lot less money invested. Now SVOL has a massive expense ratio of 1.16%, so you're going to have to price that in and figure out if or if not it's still worth it to you to hold on to this one. But overall, for those more cash flow, income focused investors that want dividends a lot quicker, SVOL is definitely one to look into. Now last but not least, one of my all-time favorites, if not my all-time favorites, a dividend paying ETF that has a ton of growth potential and the potential to grow your portfolio consistently long term, but on top of that has a decent starting dividend yield with more and more dividend growth historically. We're talking about SCHD, or the Schwab US Dividend Equity ETF, which is up around 214% on the max time frame and is basically trading very, very close to all-time highs. Now SCHD is not going to be an ETF that's going to give you a massive amount of cash flow from day one, but like I said, and like you can see, this ETF has the potential to grow your portfolio very, very large over the long term. But it's not the fact that SCHD pays no dividend, a 3.59% trailing 12-month dividend yield with massive dividend growth historically, meaning that if you buy SCHD today, not for sure of course, but at least going off of historical data, you have a good likelihood of getting paid more and more in dividends long term into the future. This means that your money is going to be potentially stretched a lot further, and every single share of SCHD that you buy today could be giving you a lot more cash flow next year, the next year after that, etc., etc. Overall, as a dividend growth investor, I find it 100% necessary to have one of these high quality dividend growth style ETFs in your portfolio, whether it be SCHD, DGRO, whatever the case might be. But these are great staples, great foundational positions in your portfolio, which is why, as I'm filming this video, I'm sitting on nearly 640 shares of SCHD across my portfolios and buying more and more basically daily. So if you're a dividend growth investor looking for some growth, but also income and more income potentially long term, SCHD, or the Schwab US Dividend Equity ETF, is a great ETF to look into. So there we have it, guys. Those are 5 of my favorite, as of right now at least favorite, top dividend paying ETFs that either offer growth, either offer a ton of income, or some of them offer a little bit of both from day one. Now, out of every single dividend paying ETF that we went through in this video, I want to hear from you guys in the comments down below. What's your all-time favorite that we talked about, that we covered in this specific video? Let us know in the comments down below. If you enjoyed this video, make sure to please drop a like and subscribe for more future content like this. Thanks as always for stopping by, and if you are interested in investing, make sure to check out these recent videos I posted right here.